So I will just introduce you guys to Ivan quickly. Ivan is a senior sector specialist in finance with the IFC, which is related or part of the World Bank Group. I've seen some of the slides that Ivan's going to present today, but he's got some really amazing views on the market, particularly with regard to fintech, credit scoring, how to move data between businesses and parties in a way that actually generates economic revamping of different spaces. So take it away, Ivan. I'll hand over to you.
Great, thank you very much, Ben. Let me just quickly, I'll share my screen with you briefly. I have a short sort of discussion presentation based on some of the context that Ben set for me. So what I wanted to just share with you all is not so much, to be honest, some solutions, but some reflections on some of the problems that the financial sector is facing, and in which data portability and perhaps this notion of the digital person can play an important role. And this is quite timely, of course. I mean, this is not a terribly new topic, but it was actually just last year that the main theme of the World Bank's World Development Report was all about data. How do we harness it for better lives, as they say? How do we practically design approaches to overcome some of the barriers that the use of it currently faces, including some of those that pertain to data security, data protection, and the interests of individuals. So I'll just share a few ideas of what we're seeing on the financial market side, particularly in East Asia, where we've done some research on this recently, and in the context more of SME, trade finance, and financial inclusion. So maybe the first thing to note is that really a lot of the change in the financial sector is being driven by broader adoption of technology outside of the financial sector. We've seen the rise of some of the larger big tech platforms, of course, over the last 15 to 20 years. But over the last 5 years, I would say, especially in emerging markets like in Southeast Asia, we've seen a very rapid rise in the rollout of digital platforms that support businesses and individuals across a whole range of their activities on a day-to-day basis. And in particular, the rise of platforms which are often on cloud and designed to be open architecture and interoperable. So in areas from purchasing and inventory, new versions of ERP systems, growth in digital payments of various kinds, in the areas like logistics, and even in areas of power or industry specific applications for agriculture or health or education. There are many, many more specific business models that are helping their users, their customers, their partners digitize information about their business, about their consumption habits. And those are beginning to get tapped into by financial services providers to improve, at the very least, things like credit scoring mechanisms, but also to improve the way that client acquisition takes place, and to develop services that we're now referring to as embedded finance, where real sector firms continue to blur the boundaries between what is finance and what is the real sector. And that's leading, of course, to a whole new range of actors in the sector. But as they move ahead, we're starting to see that if you're not a big tech and you're not an established bank, that there are a number of barriers that they face to mobilize, responsibly use, and apply data coming from different parts of this emerging digital ecosystem. So here's an example, if you like, of where we see some of the market failures appearing. Now, if you are on the left-hand side, a very large tech firm, maybe as large as Grab or Amazon or Lazada, you have quite a significant walled garden of information. You have a lot of internal teams capable of analyzing data, navigating all of the different data protection and contractual rules around using it and sharing it. And you may be able to partner with larger financial institutions that equally have the clout and the capability to apply that data to the development of more efficient financial services. But down at the bottom of the market, where companies are perhaps just smaller at this stage because of their growth cycle, but also perhaps smaller because they're focused on a much more niche area of the economy, they may only have bits and pieces of data, which ultimately will be much more powerful if people can merge it, in particular financial institutions can merge that data with other sources of public, private data already within the financial services sector, to adapt their financial services to the needs of those types of customers, platforms, and their partners. But a lot of those companies are not sharing data today. That data is not being harnessed. It's not being used in an economically efficient manner for a variety of reasons. So for example, on the data provider side, many of them don't use it because it's not yet structured. It's not standardized. It can't be used in a reliable manner by other participants in the economy. Or they may have strategic concerns about providing that data to third parties who can provide analytical skills, review that data, and make the learnings from it relevant to other commercial or non-commercial parties. They may fear that if they give up too much control over that data, that they're giving somebody a free lunch or they're missing out on a future growth opportunity. And because they're often new and they're only seeing part of the ecosystem, they may not be in a good position to apply the right expertise for modeling, machine learning, AI type processes that are now more and more prominent across industries and the financial sector. On the other side, banks and other lenders may be reluctant to tap into that type of data because it's not yet proven in terms of its capacity to predict defaults or inform other risk models. They may only be able to use it if they can integrate it with or merge it with other sources of reliable data. For example, eKYC data, or data that helps you identify in a reliable manner the data subject to which those data attributes or data credentials relate. And they may quite rightly, given their role as regulated institutions in the financial sector, have concerns about the robustness, the business continuity, and longevity of the data partners that they may be working with. They cannot be in a position where small companies drop out of the economy or are overtaken by other firms and therefore lead to a breach of service continuity on their side. And it's in that context that we're beginning to see, I think, a range of different approaches and service providers trying to plug these gaps in the market and, in a sense, to broaden or democratize access and usage of data. But a lot of the regulatory frameworks are not yet in place. Some of the companies that are trying to do this, of course, are still at an early stage of their development and are only really going to be able to demonstrate the power of their new models when they get to a certain size. So there's an element of chicken and egg going on. And large incumbents, of course, like in any industry, are faced with the conflicting incentives and constraints that incumbents often face. How do they reinvent their own model without cannibalizing their existing revenue and client bases somehow in parallel? And so when we see these kinds of challenges at the level of the market, you can see that when policymakers start to think about them, about how to address some of these gaps in the market and how to enable the market to more efficiently harness some of this new data in a responsible manner, you start to pull on a thread which really draws on a whole range of policy issues, which unfortunately to some extent are very much overlapping, and like the real world we're dealing with, start to realize that they're sort of blurring into different jurisdictional and regulatory boundaries. So just a few of the most important ones that we encounter when we're trying to address some of these challenges are listed here. I'll go through a couple of them. On the one hand, we have very robust credit reporting and credit bureau infrastructure in many countries. And this has been a very important foundation stone for many economies to improve the efficiency of the financial sector, to exchange data amongst lenders, and to avoid over-indebtedness. But credit bureaus tend to have specific regulatory structures or governance structures that hinder their application to these new areas of data that are outside the remit of member financial institutions generally. We have open banking spreading across the globe quite quickly, and in many ways addressing some of the challenges we see in terms of how to mobilize and provide access to some of these new pools of data. But again, most open banking initiatives are focused on getting information out of the banks and not necessarily at this stage, there's some exceptions like in Australia, working towards integrating many of those other parties in the economy that also have important data. It's focused, of course, on the role of users and their consent-based delegation of authority to third parties, which is helpful, but these are slow-moving regulatory challenges. We have issues of competition policy. Competition policy has typically done a good job at identifying antitrust cases and imposing retroactive enforcement measures to try and address cases where market power has been abused. But here we're looking at a different paradigm within competition policy where government and their authorities are trying to figure out how do we actually broaden access now before some of the market concentration issues we've already witnessed have already had the effect of constraining innovation and competition. And of course, much of this is taking place in the international realm. Most of the countries that we look at, even if they are quite small emerging markets, are already highly integrated with the international economy. When it comes to digital services and platforms, you only have to look at things like Google and Facebook to realize that California is already doing a good job in international trade in areas that pertain to even the most local SME finance operations. And of course, lastly, just to bring it all together, some countries have, of course, recognized that this is an overarching challenge in which not just the financial sector has a stake, but the broader economy, and therefore they've begun to articulate whole data market strategies to try and broaden access and control that users have over their own data. Now, what's interesting about this from a financial services perspective, is especially for people that have worked in fintech and payments and stock markets, is a lot of our infrastructure has been built around either closed loops or increasingly federated schemes, hub and spoke models, in which different types of participants have begun to broaden access to data exchange, payment exchange, markets and trading. But they're still very much focused around networks that have bottlenecks in which there are issues of control, and it's often difficult to scale up the usage of data and transactions within these networks without thinking fundamentally anew about how we model them. And that's, I think, the context in which we've now seen companies like Dataswift, of course, working on approaches to bringing in multi-sided networks to finance. So that there's an increasingly dynamic discussion in the financial sector about decentralized finance and how to mobilize, among other things, data networks to boost the control and innovation that we can enjoy outside of finance and bring it into finance. And so if we narrow down to some of the cases that we've seen some of the tech firms look at more closely here in not just Southeast Asia, but in many markets, they're beginning to realize that there they have to have alternative strategies to data mobilization, portability, and harnessing of data for their business model in hopefully what they see will increasingly become more open market structures. So what we've seen is that typically these companies start out with a strategy of trying to generate more data, harness more data internally. And that's a great strategy, a sort of plan A that most startup companies try to follow. But of course, they realize increasingly that not everybody is going to get to the scale and size of market power that the likes of Amazon or Google may enjoy today. So there has to be a plan B. How do I tap into data that's out there that I don't necessarily own through my own client relationships? And so, of course, we've got different strategies on the board. We have the scaling up of bilateral relationships. To some extent, these can evolve also into federated structures. But a lot of companies realize that these are fundamentally difficult to scale. They don't scale in a J-curve manner, in an exponential manner that many of the other platform companies have enjoyed. They typically scale at less than a linear progression. We also have certainly, there's certainly still an important role for hubs, for hub and spoke models to be reformed, to integrate new types of data, new types of users and contributors. But again, these types of models will probably only progress slowly and with an important degree of interaction with policy and regulation. And that's the context, I think, in which the topic, again, at hand today of data portability is being seen increasingly as something that needs to be explored as a way to broaden the growth trajectory, really, of financial markets, learning from what's happening outside of finance, but still in a way which can maybe find governance structures that help to address the understandable concerns of security, integrity, and safety that go along with governing modern financial systems. And you can see this is not an isolated topic. What I'm sharing with you is just a very sort of small insight into what we see at the IFC working with SME finance and tech companies here in the region. But getting this right, figuring out how we apply data portability and data ownership, not just for natural persons, but also for legal persons and a wide swathe of companies in between that are often operating as sole traders in that gray space. These are important issues for regulators, for example, at the BIS, where there's been a very healthy debate over the last couple of years about what the approach should be to data, not just for financial services firms, but how big techs are approaching it and how regulators in these different areas that I mentioned, financial sector, competition policy, are approaching the new economics of finance. And another example I thought might be worth putting out there for this audience is what's being currently debated in the whole realm of trade finance, where they face similar bottlenecks due to long-standing incumbent industry structures, where a lot of the data that is important for originating loans, understanding risk, helping companies manage their overall supply chain and linking that more efficiently into not just global finance, but local finance is something that the ICC, the International Chamber of Commerce, the Fung Group in Hong Kong, and McKinsey have been working on recently. This is just an excerpt of their blueprint for the next stage of their initiative to help unlock the power of data in trade networks. So those are a few other areas that I thought worth putting out there for discussion. And with that, I'll hand over to Ben to see if there are any comments or questions.
Thanks, Ivan. That's great, and really appreciate the intelligence gathering that has gone into that presentation. So I'll let folks post their own questions. There's quite a lot of information to take in there. Oh, we have one here. So from anonymous attendee, what are the deficiencies or drawbacks in IFC's or Dataswift's ideology toward data and its personal ownership / portability / interoperability? Good question. I'll let you answer that. Ivan, Dataswift's name is in there, so I might chime in at some point.
Okay, drawbacks. Well, I think that it's not so much that I would see drawbacks at this stage. I think we're all still very much in learning mode, because this is still, first of all, it's new territory, I think, for most industries. And then what's at stake in the financial sector is, generally seen to be, more important, from a typical security, integrity, and safety perspective. And so I think we're at that stage where we're trying to better understand what could be the drawbacks. We know that we have anecdotal information about some of the risks that need to be addressed. And maybe I can just mention, 3 of them. So I think the first thing that comes to mind in these topics, in this context, is governance. It's all very well to put in place arrangements for participants to have more control over their data and with whom they share it and in what context. But somewhere in all these decentralized systems, there are still elements of governance. There's still got to be a legal backstop. There's still somewhere there the nation state with its legal systems, to which these things then may eventually, in the worst case scenario, have to answer. But just what those governance arrangements should be in order to align with the broader policy interests of financial sector regulation is something that I think is still unanswered. That's one. Secondly, I think that there are, in this whole debate about data, on balance, more data and more information is good, we know. But we also know that there are instances where data can be used, where more clarity can actually lead to things like financial exclusion, particularly if we're talking about full transparency around insurance. So these are issues that, again, have not yet been addressed. They're well recognized also just in the broader world of fintech, and they need to be thought through as well as we think about data portability schemes. And then, of course, the last one, which is a little bit more conceptual, is the impact on market structure. Again, and this is a debate which is not just to do with data portability, but is a broader theme to do with concerns about the impact of fintech and innovation and decentralized finance, again, on market structure, on the stability of some of the existing institutions and types of institutions really that make up the backbone of the financial sector. Regulators are, of course, concerned that if we make too quick a shift towards completely decentralized finance, that could also introduce risks to the overall stability of the ecosystem, undermine the profitability and the buffer zones that banks use to finance the economy. And those types of issues also need to be thought through in terms of their impact on market structure. So I would just cite those 3 to begin with.
Yeah, no, I think those are great answers. And I think in terms of the word deficient, just looking at the specific verbs and adjectives that are in the question, I don't think there's any specific deficiencies per se, because summarizing, I think what you're saying, Ivan, you're talking about a shift in plumbing, right? So we're going from a plumbing system where you have one giant pipe through which all of the data flows or all the money flows, or a combination of the two, to a system where actually we've created smaller pipes which go off to individuals and allow them to contribute to the system from their own house, per se. And that migration takes time. It's an entire infrastructural change. So all of the above that Ivan said fitting into that. The only thing I would add, I think, is helping folks understand. So it's in line with that infrastructure shift again. If it's hard for regulators to understand, it might be the same level of difficulty for businesses to understand. So just creating a means to shift from the centralized to the decentralized environment super quickly, which actually we've seen happening a lot with some of our partners quite successfully now, which is good. So still in learning mode, but getting there. So another question we've got here is, have you seen financial data moving and having impact outside of the financial sector yet? Which is a great question, because I'm assuming from whoever posted that, that's related to what decentralization can do. It's very hard to do that today with centralized silos. So you're on mute, Ivan.
Sorry. Yes. I mean, I think the simple answer to that is yes, definitely. I mean, we've seen lots of news sources and types of data already being mobilized throughout most economies, leading to both, and of course, leading sometimes to very, very good effects in terms of expanding financial inclusion, expanding innovation and competition efficiency. Take the example of online accounting platforms, relatively straightforward, whereby businesses can actually now start to share data, which is actually very, very meaningful for financial services provider, and with mechanisms to be able to have a lot more trust in it, because you can also cross-reference it, let's say, with actual invoices or account statements or transaction records. And the other extreme, of course, we have much less sort of standardized data, to do with behavior, looking at what people buy and sell on platforms that are being used in countries like Bangladesh or South Africa or the Philippines, where there's much greater indication about the health of a particular business, where before they only really had hearsay, or they didn't have any tangible information. But that's not to say that that information is easily accessible. That's not to say that there aren't big rents being earned by companies that hold access to that data. Of course, there are other instances where, if we look at the buy now, pay later phenomena, there are also elements of data that are being mobilized there, which at this stage, the jury is still out whether buy now, pay later has gone too far in creating an oversupply of credit in a way which may be destabilizing.
Yeah, that's very true. I'm going to quickly smash through a couple more questions because we've got some good ones here. We've only got a couple minutes. So skipping through a few of these, let's pick it. So wouldn't you say there is already an element of decentralization? For example, each firm still owns their own ETL process and data governance, which still applies some level of etiquette in storing, handling, or sharing, etc.
I'm not sure what the abbreviation ETL stands for.
Me neither.
But I guess the point is that yes, in theory, there is already a significant amount of decentralization, because most of the laws we now have in this area, whether it be for natural persons or legal persons, do accord the rights to that data to those individuals. The question is whether they can, in practical terms, do anything with it. And I think that's where the answer is much more ambiguous. Even in open banking, yes, there is quite a lot of data access being developed, so people can actually then obtain their data, or rather enable a third party to access data and then to share it with another party. But I would hesitate to call that decentralized. I would describe that more as federated, because in those instances you're still working through a proxy. The individual still needs to give consent to a third party, so that that third party can then share their data with another party, which by definition it's not decentralized around the individual. Again, whether it's an individual natural person or a legal person, but you're working through a proxy, and that will always create an additional bottleneck, because the system needs to, first of all, be set up in a manner where there is some kind of rules deciding who can actually be a proxy, what those proxies are allowed to do in terms of contractual and commercial terms with end users. They can have an influence on the network with which people can then ultimately share their information. So I think there's still a long way to go to make those sort of federated systems where people have a legal right operationally actually translate into more rights being exercised economically.
Yeah, that's very true. I think it's quite interesting trying to get your head around the various models and how they actually differentiate. So, like you say, it's somewhat of a federated model. Whoever posted that question replied with ETL. It's just their data supply chain. Rereading the question as well, I think the way the question's phrased, without having them live on call here, it looks like they're saying, look, with each business having their own data governance setup, is that not decentralized? And I guess the answer is, what data are you talking about? So a little bit like Ivan's commented on, data decentralization isn't just about where it's physically stored, it's about what you can actually do with it. So who owns the data? Because if it's not your data, you can't do anything with it. And so the permission aspect, I think, is the differentiating factor that says whether or not it's actually fully decentralized. Can you go and freely use this elsewhere? Because if it's customer data, you can't. That has to be given back to customers, and customers have to be mobilized somehow, etc. But hopefully some of that goes away to answering it. Another question, we don't actually have another session after, so I don't mind folks plugging a few more. Ivan's highly knowledgeable and covers many areas of finance over here in Asia. So feel free to post a few more. Would you be opposed to a completely open data system or society where any and every data on an entity is freely accessible? And feel free to answer as Ivan as opposed to IFC.
Well, I mean, as a personal, I think the answer is no. I mean, I think most of us would be, the whole point is to be able to have control, and for individuals or companies to be able to have that actual control. And we seem to address the digital world somehow differently from the way we address the physical world. We have lots of, we have our habits when it comes to the physical world. We have paper, we have books. Nobody really has a second hesitation as to whether or not they want to share a piece of paper or a book or something just verbally face to face with somebody. They have that control. They have that luxury, you might say. But as we move more and more into the digital world, first of all, we don't even realize how much data we are generating. Data is a very abstract term. And so, it's only more recently, I think, that this consciousness that actually there's a lot of information about ourselves, about our behavior, about our companies out there, which may indeed be shared, but where we have very, very little control, and again, only through proxies generally, to share access, to delete it, to complement it, to correct it. And in that spirit, of course, I think, just like in the physical universe, people and companies will want to be able, unless the law prevents it, to decide what they do share and what they don't share. I don't see why that should be any different in the digital world.
Yep, completely agree. You've always got to relate it back to real world here. Once things get digitized, we forget that it relates to a real world instance. So no, answering personally for myself, I would not want everybody in the world able to see everything about me. If that is the premise of an open society, I think it is important that that gets filtered in the way that it does in the real world. Just picking one final good question here. I think I'll pick the regulatory question because I think you sit closest to that out of a lot of the folks in our ecosystem. How is the regulatory landscape approaching decentralized data, or is it still a bit early for this? And I guess, we've got some answers with regard to DeFi and how blockchain is being approached, but generally speaking, do you think it has a good handle on it? How's it looking?
I feel a little bit out of depth on this question, to be honest, because I'm not sure. I mean, I think it's relatively, at a high level, I think we can say what areas of regulation are concerned by this issue. We know we have GDPR. We know we have the regulation of digital trade, in which many agreements now being developed can be quite granular about what restrictions are permitted or not permitted, as the case may be, in the cross-border transfer of data. In the financial sector, as one example, and there are many other sector-specific rules, we have relatively well-developed approaches to data privacy, data protection, banking secrecy, and also related aspects to, to do with credit reporting and areas of such. But I wouldn't say that there is somehow a particular body of regulation covering data portability or decentralization. And I think that's precisely the point, is we have a number of relatively well-established bodies of regulation emerging from different areas of the policy world. But because data is so amorphous and is such a broad topic, of course, these different regulations are evolving in a pretty heterogeneous fashion, I would say, to grapple with issues that are actually quite common across the board. And one of those issues is this one of data portability. But there is no such thing that I'm aware of as a specific data portability approach from regulation.
That makes sense. Given, I'm just going to, Ivan, have you got a few more minutes?
Yes, I've got a couple more minutes.
Yeah, great. So for folks here, we're taking a lunch break before our next sessions, but I'm just going to keep asking a few of these questions. So anyone that wants to stay and hear the answers, please do. Anyone that wants to take a break before the next session, that's totally up to you. So geographically, which regions or countries are leading the way with regards to data in your experience? And when we say data there, it looks like they've said it could be with respect to data innovation, decentralization or centralization or portability. So just geographic hotspots, I guess.
I think, again, I'll talk about, I'll just share my personal exposure to this largely from the perspective of finance and the tech sectors, I guess. I think I would certainly point out that in the European Union, where there is a concerted approach towards developing a comprehensive data market strategy as well as a financial market data strategy, that's an important place where things are happening. In the UK also, where there's a very, very strong push towards development of the data economy. The US, of course, is always a hotspot for issues to do with the digital economy. Again, being led perhaps more by industry and market approaches as opposed to by the regulators, but there are also interesting discussions going on today in the area of competition policy in the US. Here in Singapore, where I'm based, certainly the government has a very proactive approach to issues around data and the digital economy, including in the financial sector. And then I think I would highlight also Australia to a certain extent, given the depths of thinking that's gone into their approach to the Consumer Data Rights Act. India is also definitely a hotspot, because India, if anything, India is perhaps a little bit ahead of many other markets in this regard, because they took quite ambitious approaches to what we now refer to as the global stack, or the India stack or the global stack, i.e. starting to create the layers of infrastructure, digital infrastructure necessary for both individuals and companies to participate in the economy around Aadhaar, which you saw there on the screen, with UPI for integrating the payment network, and now also in the area of account aggregators. So these, and these are, none of these are necessarily examples of decentralized data portability schemes, but they do lead to ecosystems, I think, in which there's quite a lot of vibrant debate across all levels, from policy to investment in startups. So those are a few examples. Yeah. And lastly, China, of course. China is an extremely important market in regards to both the policy approach and the market approach to create the digital economy. So I could go on, but I don't want to exclude anybody. There's a lot going on.
That's so true. I think there's also various interesting underlying sub-factors that allow us to identify inbound sort of innovative economies and markets. Estonia is a pretty explicit one. Obviously, they've got their whole system, I think, is decentralized. Is that right? I don't want to put my foot in it, but their entire government system, I think, is decentralized. But small countries that are fairly tech savvy, like Sweden and Denmark, I think are also looking quite promising too. And that's sticking with the data decentralization piece as opposed to DeFi or another form of decentralization. I think that's it. If there was one other interesting question around, can you give us some examples of where trade finance is struggling and how decentralization solves that? But I'll leave you to feel free to answer that if you do or don't want to. I'm just taking full advantage of having you on call. So
maybe that's a good topic for you to put on your schedule next time, Ben. Trade finance.
There we go.
It's a whole new area.
Yeah.
And happy to introduce you to some of the people working at the coalface of that.
Brilliant. Thanks, Ivan. And actually, for all of folks who've reached out with questions, these are fantastic questions. But if any of you wish to be put in touch directly with Ivan or Mike on our previous conversation, or Gabriel, any of the folks later in the day, do reach out. We're happy to facilitate intros and just any useful chats that might spur something. We're here to generate business as much as generate insights. So I will call it lunch there. Thanks very much, Ivan. Really appreciate you putting the effort into the presentation.
Thank you.
And we'll see you guys in the next session. It was very much so. Thanks, guys. See you in about.